Yeah.
Order filled, check us out.
You know what time it is.
This is the Mighty Soldiers exclusive.
Yeah. Let's get it. Let's get it.
Let's get it indeed. What's going on, guys? Andy with Mighty Soldiers Trades. We are back with another episode with the Mercator himself, basically Gianni DePolci. Did I say that right, Gianni?
What, my name or the name?
Yeah, all of it.
Well,
I didn't say any of it right. Okay.
It's the Mercator, but you did say my name correctly.
See, I was so worried about the name that I messed up the one that I always get right. So I don't have a clue what's going on there. But anyways, Gianni, it's great to see you today. How have you been?
Well, I've been good, man. Staying busy. You know, agricultural season's picking back up. A lot of allergies floating around. You could probably hear a little bit of stuffiness in my voice, but it's great to be back, Andy. I miss these sessions. You know, life happens. We both had a couple busy weeks there, but I'm glad to be back here to talk in markets with you.
Well, I'm glad to have you, but like we were saying before we came on here, I'm going to look for that coin. I'm going to send it to you. It's a Roman coin. But anyways, on the back of the coin, guys, it has a centurion, I guess, and another dude getting stabbed on the horse, is falling over, all that good stuff. And it says "Fel tempora ratio. Happy days are here again." So what do you think, Gianni? Happy days are here again, or we in for some more of this chop?
Well, first of all, I'm going to hold you to that. You sending me that coin. But second of all, yeah, you know, talking about stocks, I think there's a good chance that we see a little bit of consolidation or choppiness here in the next couple sessions. Sentiment's starting to get a little bullish in the short term. You go back to a month ago, everyone was, you know, calling for the end of the world again. We had the banking crisis and all that kind of stuff. So I'm still long, but, you know, I wouldn't be necessarily adding to longs aggressively at this point in time, waiting for a dip. And then, you know, looking to add a little bit on the dips. And then if we do make a new high above the most recent highs, looking to buy the break to the new highs. So the big thing for me, Andy, is I think the dollar's coming off of a low here. And how are stocks going to react in that situation? You and I kind of had a little bit of an exchange on that on Twitter earlier today, because I still don't think this inflation story is over yet. And I think that's what stocks are going to have to figure out. And how are we going to react to a rebound in the dollar if that happens?
Yeah, I seen today. I'm going to bring it up right now. I saw your tweet earlier. Said it's been done before and it can be done again. Equities will have to figure out how to rally with the rising USD if it's going to be sustainable. The bigger implication is is with respect to relative performance abroad. Yeah.
So I mean, foreign stocks, international stocks have been outperforming domestic stocks year to date, and obviously U.S. stocks have been the place to invest for the last decade, more or less. But we saw a little bit of a mean reversion. And a lot of times when you see the dollar coming down or on the retreat, foreign stocks do better. When the dollar does better, foreign stocks underperform and domestic stocks do better. So the big shift that's happened from a macroeconomic standpoint is, you know, we were used to for decades when the dollar would come down, inflation would go up because commodity prices would rise. But I think the game has changed. I think what's happening is that as inflation goes up, as commodities rise, interest rates follow the higher inflation rates, and global capital wants those higher yielding dollars. So the question is that can demand for U.S. stocks overcome what was historically a deflationary force in a rising dollar? I don't think that's the case anymore. I think that we'll see the dollar rise with inflation, contrary to the expectations of most people. Because, you know, the trendy thing on FinTwit, Andy, is to call for a collapse in the dollar and hyperinflation and all that kind of stuff. But if you look at the charts, I mean, the dollar could be hammering out a higher low with respect to the longer term trend here. So I think that's what I meant by that, is if stocks can figure out how to rally during a dollar rebound, then it's going to be very bullish for U.S. equities. And you actually want to see that because it's indicative of global demand for U.S. equities. When you see a local stock market appreciate while its currency depreciates, it just means that rally is a function of currency depreciation. It's not a result of net global demand for shares of that stock market. So the winner takes all when you see the local currency rise and the local stock market rise.
So it sounds like correlation is a lot like a moving average. You can
Yeah.
look at it as a potential area of rejection, but if you blaze right through that, it's telling you a whole different story that might be even more important.
Well, it just tells you that the macro sands are shifting. So
Yeah,
that's what I think is happening. You know, inflation is not a linear phenomenon, right? We had a big burst of inflation in 2021. It peaked in mid 2022, with the highest CPI rating was in June of 2022. It's been coming down ever since. But you know, crude oil has been coming down. So now, if I think crude oil hit a pretty significant low. So I think on this crude oil rebound here, if crude oil starts to take out $84, $86 a barrel, I mean, I wouldn't be surprised if we saw crude oil, you know, trading around 140 by the end of the year.
So since you're bringing up crude, I've been looking at these charts. I'm thinking this every day now for at least the last few days, couple days. Crude is looking a lot like the ES. Why is that? Do you have any?
Well, you know, again, if this kind of builds on that thesis that I was just explaining, Andy, if the U.S. dollar is going to exhibit a positive correlation with inflation, that would tell me that crude oil is going to be doing well in that environment. Now, can stocks figure out how to rally with a rising price of crude oil? Because if we go back to last year, when crude oil was bullish, stocks did not do well, especially Q1 of 2022. Stocks were on the retreat. Crude oil was booming, but stocks have been doing well since October. But if you look at the Russell 2000 index, that actually bottomed back in June of last year, right when inflation peaked. So that's what I'm looking at here. And historically, you know, stocks are actually a better hedge against inflation than commodities, because commodities are a lot more volatile and cyclical. I did see a comment that you shared that we should do a show on agriculture. You know, I cover a lot of commodity markets, you know, grains, oil, all that kind of stuff. So I would be happy sometime to dedicate a show exclusively to what's going on in the commodity complex.
Yeah, I'm so basically I'm looking here at gold. We're at 2008 30 cents right now, and you know, the rumor, the word is 2200. I had said I think on several different shows now that I'm not really looking to go long gold. I'm looking more if we do hit that 2200, maybe to go short at that point. But anyways, we have to see what happens when we get there. But do you have a bull thesis or any idea on how you're looking at gold right now?
Well, I'm looking for gold to pull back a little bit here in the short term, but I would like to see gold hit around 2,500 an ounce. If you look at gold denominated in other currencies, we're pretty much at new all-time highs across the board, with the exception of the US dollar. Now, again, going back to, we always have to look at an asset class through the lens of currency. So if gold's broken out to new all-time highs in the Japanese yen and gold, all these other currencies, but not in the US dollar, and the US dollar's on the cusp, in theory, of beginning a rebound here, I'm going to want to see gold make a new all-time high. If gold can make a new all-time high while the dollar is rebounding, that to me, that says there's a lot of demand for gold. But if you go back to even the last few years, gold has not really done well when interest rates have gone up. Every time gold has exhibited a nice bull run, it's been through a period where interest rates have been going sideways or even going down. That's because gold doesn't yield anything, right? So if you're in an inflationary environment, gold is not really the best option. Contrary, like I really don't view precious metals as a hedge against inflation. I view them as a hedge against uncertainty. And given all the monetary, banking, geopolitical problems in the world right now, there is no shortage of uncertainty. So I think that's the real story behind precious metals instead of inflation right now, especially since inflation has been coming down since June of last year, according to the CPI data.
If we do start seeing more of a pullback in the market here, would you then look again to utilities?
You know, utilities have been one of the worst performing sectors in the last, going back to basically July 1st. So let me put it this way, Andy, if we do see utilities start to outperform again, that's a risk off signal. No, I mean, I still like the energy trade. I like what tech's doing. I really would like to see tech maintain its strength, its relative strength that's exhibited over the last couple months, over the last several months. But if we go back to July 1st, 3 of the top 4 performing sectors of the S&P 500 have been inflation related. So first place is energy, then you have industrials, then you have tech, and then you have basic materials. So the inflation trade never really went away. It just consolidated. So that's why I don't think that story regarding inflation is over. And I still maintain that we're one nasty geopolitical headline away from another run in commodity prices. And especially, OPEC did that big production cut, crude oil gapped up. To me, that's a bullish breakaway gap because we never came back down and retested it. And that's why I think you have to keep a close eye on that $84, $86 level in crude oil. If that breaks, really look out above. I wouldn't be surprised to see oil at 98, 100 pretty quickly.
And the kind of trader that you are, if I got this right, first of all, you have a bachelor's degree in economics, correct?
Yeah, once upon a time.
And you are a momentum breakout trader that's more of a position trader, right?
Yeah, that's right. I have an economics degree, but I don't trade based off of macro. I really think that the macro follows the price. So, to me, I use the technicals, I use cycles to determine trades, and then I figure out the macro story after. Because, as I like to say, sentiment follows price, not the other way around. If markets followed sentiment, not the other way around, everyone would be a master at trading. But we know that's obviously not the case.
I've had many times where I've chased news, and I learned rather quickly that chasing news didn't work out too well for me. So I'm assuming that's. I was actually thinking the same thing with the market. Sorry guys. That was my Benzinga Pro. I want to turn it off. I don't know if you guys could hear that or not. Could you hear? You could hear it in the background, right?
No, I think you muted the mic, didn't you?
I might have got to it on time, but anyways, it just blasted in my ears, guys. I got these new speakers and they're quite loud, and I might go deaf in my other ear by having these speakers here, but it's worth it to me. So if we ever have to move on, to worse hearing for me, just know that I signed the contract. I signed the deal. But yeah, so one question I wanted to ask you, this might not be necessarily about markets right now, but as a breakout trader, when I first started trading, I thought a breakout was a horizontal, resistance break. That's what I thought of as a breakout. Can you tell us why that's wrong, or how you see basically any of this? Anyways.
Yeah, well, that is still important, when you see a break above a horizontal level of resistance, but it's all contextual, right? So how long is that resistance zone in effect for? So a breakout above resistance at a 2-hour interval on an intraday chart is nowhere near as significant compared to a breakout above, resistance that's held for 2 years, right? Hence the saying, the bigger the base, the higher the space. So again, it's contextual. I'm more enthusiastic about buying a breakout above 2+ year resistance zone, especially if there's a chart pattern present, right? Like that's my big thing. It's not just horizontal levels of support and resistance. I want to see a chart pattern, and a lot of times you do see that, whether it's a rectangle, cup and handle, triangles, or whatever. But time is an important factor too. That's why I like to use cycles and that kind of stuff to assist in that, because after all, there are two axes on a price chart. You have the y-axis, which is price, and then the x-axis, which is time. And a lot of times, not a lot of people in the trading community, and that doesn't mean that they're not good traders. There's a lot of very good traders that don't even really look at the time factor. But for me, I think that is probably the distinguishing factor in terms of my performance is, are my price studies in alignment with my time studies? And if so, that increases my success exponentially.
What I would like to bring back into my trading more these days would be volume by price, the volume profile. Yeah. I had that in my trading, and I just kind of let it go away because I don't really need much more than the bid-ask spread and basically the candles. I throw some moving averages on there to let me know what neighborhood I'm in, basically. Yeah. But not necessarily like, oh, we touched here, so I'm buying this or selling this. It just more to give me an idea, because I've been looking at and using these same things. Dan Merkin just said it in a really great way. I probably can't say it as great as him, but he said when you're going golfing, you choose your clubs and you go play, and you get good with those clubs. You don't keep going back and recalibrating your clubs over and over again. And I thought that was brilliant, because that's pretty much what I've done with what I have in my charts. You hear people say, oh, moving averages don't work. Well, nothing works. Nothing actually works, But
I was going to say, like, for anyone watching, like, you'll notice what Andy and I are discussing now. We talk about price. We have our own indicators, but it's not like we're flip flopping. You have to develop and find the indicators and the strategies that work for yourself. some people don't have. I mean, I don't have the temperament to be a day trader. I don't like to day trade. I know you're a good day trader, Andy, but me, my success is better really the less I trade. I mean, if I'm trading a couple times, I mean, a couple times a week is like generous, but really it's a few times a month. I mean, I like to trade, once or twice a week. And my joke, I've said it before here, I'll say it again. I'm only a day trader when I'm wrong. And so like if I'm buying a lot and I keep getting stopped out, then like if the frequency of my trading is up, it usually means I'm getting stopped out more than I, should be, because I'm not taking on good trades. So it's important to keep track of what you're doing, when you're doing it, and why you're doing it. And sometimes if you get on a cold streak, just take a little break. It's okay. The markets aren't going anywhere. Contrary to what all these collapse people say, they've been saying it for a long time, Andy. You and I have been in this game for, decade plus. I mean, people have been calling for hyperinflation and collapse of the dollar, $10,000 gold since like 2010, even before that. And here we are, over 10 years later, and it still hasn't happened. So the markets have been around before. They've been through worse. They've been through world wars, civil wars, famine, energy crises, bankruptcies, all that kind of stuff, and they still exist. So don't let the fear get into your head as a trader.
What I keep saying is this: basically, if retail's getting slaughtered, who's left? The wolves, the lions, the sharks. I mean, everything that you don't want to be messing with. And as you're saying, me as a day trader, I've come in here arrogantly and think that I can trade any place, anytime. And I love to learn that I'm wrong. It's really fun for me, Gianni. There's something wrong with me. I really do love to get proved wrong, because then I get to see how things are working. Sometimes I can tell you guys that I can't go long or short. It's not going to work for me either way, because I'm in a battle with people that are far greater than me at this, and just some places on the chart shouldn't be touched.
Well, it's one thing, like, growing up, I was always pretty competitive, but you can spend a lot of time training. You can spend a lot of time, to use in the context of trading. You can spend a lot of time preparing for your trades and analyzing markets, but there's always going to be someone that you come across in your life that's bigger and badder than you. And in markets, that's going to be someone that's a better trader than you, and someone that takes the other side of a trade and they end up being right. And you just have to make sure you don't get slaughtered, right? You don't want to get KO'd, to use like a boxing analogy, right? Just make sure, like, run out the clock, and just make sure you're not wrong long enough to put yourself into that corner.
Yeah, the path of least resistance and no large losses. James Bradley says it all the time: no large losses. He talks about how long it took him to basically get himself to submit to that. You talked about how long it's taken you to submit to that as well. And it takes a while. I could be still struggling with this forever. I think that, it's a process that just continues. You just keep getting better and better as you go. And I've learned to get bumpers. Call it like bowling with bumpers. I've learned to put bumpers up to protect myself from me, because I know how foolish I can be, in this. But Gianni, I don't want to keep you here all day. I know that we're only going on 15 minutes. We're at 18 right now, but I love talking to you. And if anybody wants to find you, where can they go check you out?
You can find me at MMAcycles.com and benzinga.com. And if you want to see my daily commentary every now and then, I'm pretty active on Twitter at Gianni_Depoce.
Yeah, great stuff, Gianni. I really appreciate you coming on here with us. And hopefully you have a great day. And thanks, guys, for joining us. Thanks.
Thanks, Andy. See you soon.
See you.